Hey everybody, it's Mike from Orderflows, and in this video I'm going to talk about the order flow delta. Now, order flow delta differs from options delta, right? Options delta is the theoretical estimate of how much an options value may change given a $1 move up or down in the underlying security. Now, with order flow, when we talk about delta, it's the net difference of aggressive buyers versus aggressive sellers in a bar. Remember, right? The market moves in a two-way auction. There's a bid, there's an offer. And when someone crosses the bid and offer, either to buy the offer or sell the bid, they are the aggressor, and that would either register as +1 if it was aggressive buyer as positive delta, or -1 as negative delta if it was an aggressive seller. Now, there's different ways that you could actually look at delta. And on most order flow charts, it will appear along the bottom. You can have delta. There's actually max delta, min delta, cumulative delta, and there's a few other little other ways of doing it. They do like percentages of bars, cumulative delta divided by volume. But for the most part, most traders look at the delta, the headline number, the max delta, the min delta, and cumulative delta. Now, every bar is going to have a delta, and once the bar closes, the delta is not going to change. But as the bar is forming, obviously delta will still change because there's still trading taking place in the bar. Now, the reason I'm making this video is because I was triggered. I got triggered. I was on social media the other day and, just reading things about order flow, and somebody that's got, kind of a decent following says delta doesn't matter, right? I mean, there's no value in looking at the delta in order flow. It has no impact on price movements. And I got to admit, I was triggered because I do use delta in my analysis. Now, for someone to say that, maybe, he hasn't met anybody that's using delta in their trading, or, hasn't understood how to implement it with his own trading, right? I know this guy is big on imbalances, and honestly, imbalances is a form of aggressive trading, right? Obviously, you've got aggressive buyers or aggressive sellers causing an imbalance, and delta is just another way to look at it. Now, like I said, there's different forms of delta, right? There's the headline number, and that's what most traders look at, right? So you can see delta appearing, like this bar right here in the middle, -196, this bar here, +236, this one -52, -58, 140, 381, and this is the number, right? When I say delta, right, the headline number, the delta is what most traders key in on. They don't really take it even a step further and look at max delta and min delta. Max delta is the most positive delta was in a bar. Min delta is the most weak it was in the bar, or the strongest selling it was in a bar. So for example, max delta is, say, 256. That means at one point the strongest that the positive delta was +256. If min delta was, -130, then the strongest it was in terms of aggressive selling in that bar was -130. Now, you could have delta could be 0. Okay, to me, that just more of coincidence happening. When the final delta lands at 0 is just probably because the bar closed for whatever reason, right? Especially if you're looking at a time-based chart, it goes by time. If you're looking at volume, it goes by volume. And it just so happened that, the way trading panned out in that bar, it just ended at 0. If there was another nanosecond, it maybe could have been +10 or -5 or who knows, or don't read too much into it. Don't think, oh, it landed on 0, that must mean something. However, when you look at max delta and min delta, you do see them landing on 0, and that does tell you something, right? So if you see, obviously, like this red candle here, you've got max delta of 0, min delta of -87. At no point was there net aggressive buying in that bar. Now, there is going to be aggressive buying, right? They are going to trade on the offer. There's going to be aggressive buyers. But what it's telling you is this bar was under pressure from the get-go, right? Meaning there's always been more selling pressure than buying pressure in this bar. And there's going to be times where you have min delta being 0, right? You can see here this green bar, right? It's got min delta of 0, max delta of 18, final delta of 13. So what happened was there was selling into the bid, but there was always more aggressive buying taking place in that bar. Now, one of the ways I like to use max and min delta is look at it in relation to where the final delta is. Okay, so if I see min delta like this one, minus 87, max delta is 0. Okay, it's telling I got a good idea that there's strong aggressive selling taking place. Minus 68, it's close to minus 87, so I know that it's closing right near its min delta number, right? So I know that the selling is strong. Now people say, what about this one, right? The max delta is 18, min delta is 0. We closed at 13, so we're only 5 contracts off of our max delta. Well, yes, I understand that argument, and normally I make that argument, which I'm going to show you in a second. But when I look at the headline delta numbers, I have a number, depending on the market, I have numbers in my head of what I consider to be normal order flow delta, right? If I start seeing small deltas like this, 13, it's under this threshold that I have of about 50 contracts, meaning, if delta could be plus or minus 50 to have meaning. So if it's coming in at 13, it could have easily gone negative delta if there was, 5 more seconds in, or one more trade went through before the bar closed. So I don't put too much into it. But when I get down here, right, so I can see, right, there's strong selling in this bar, minus 87, 0 max delta, right? Market sells off a bit here. Now it starts to turn. And as it's turning, I see these 2 bars right here, right? You can see delta is 140, delta is 381. Min delta on these 2 bars is 0. First bar here, max delta is 189. We closed at positive 140. That's encouraging. Here you got max delta of 388. We closed at 381. So we're closing right near our max delta number. Then obviously in this next bar here, we got min delta of minus 13. Again, this bar came down, poked through the swing low here, and then came back up. But max delta was 107. We closed at 107. So I'm starting to see some signs of strong aggressive buying taking place. Now there is aggressive selling in these bars. Obviously, people are selling onto the bid here. But at no point was it really dominant in control of this bar, right? And you can see as the market starts moving back up. Now, another way traders like to look at delta, I mean, I actually have a course on delta, but, I don't want to be pimping the course out here. Rather, I just want to be talking about, different ways you could use delta. And, a simple way is there are what I call delta candles. If you're on a Ninja Trader on the paid version, I forgot what it's called. It's called like Orderflow cumulative delta or something like that. And you could look at delta per bar as a candle or in cumulative delta, right? As the market is moving up, how the delta is transacting. Some people I know actually like to look at delta as opposed to price and take trading decisions based off what's happening in the delta, not what's happening in price. But this morning, right, today was Labor Day in the US, so markets are quiet, very quiet. And you could see here, right, this was, just before 7 in the morning. Market is sort of grinding its little way up. Then you got big aggressive buying here, right? Big bar up. You look at the delta, you're like, wow, that's so big. But, again, it's relative to what the delta is coming in here. So it's plus 115. You come up here, start making the swing high here, okay? And what's happening in delta? Nothing's happening in delta. You got minus 1, minus 7, minus 22, minus 26. Actually, delta is starting to turn negative. Now, again, these are very small numbers. This is actually what we call a delta surge, where it's sort of growing directionally in strength. Minus 1, minus 7, minus 22. And what happens to the market? Market starts selling off, right? And, this is sort of a pattern that you would see during the day quite often, right? So, that's another way you can use delta, right? You could use the delta candles like this. And it's gotten to the point where traders aren't even looking at a footprint chart. They're looking at a delta chart, right? This is the delta candles on the bottom. Here we've got, this is the bar by bar delta, as opposed to having to look at, say the numbers here, right? Sometimes it's easier just to look at how it's formed on a candlestick, right? And the mind processes images much faster than words and numbers. So if you could look at a candle and say, oh yeah, that's bullish or bearish, that's going to give you a faster reaction time. Down here is cumulative delta. And today is, let's say President's Day. Today is Labor Day, and again, it was quiet. But Friday was a bit active in terms of market activity because it was non-farm payrolls. And if you remember, right, market started rallying. We opened. Obviously, the market rallied off the number, made a new high, came off, made a new high, in the morning, and then it had this big dramatic sell-off. Now, to say that delta is useless to you, look at this high up here. Okay, let's see if I can draw a line here. Excuse me. So you got a high up here, right? We came up here once, twice, third time. And if you're just watching it, you have a high of the day, okay? And anytime you're at the high of the day, you got to be asking, are we going to go higher or not? Are we going to take it out? Or are we just going to sputter around and sell off? And what's happened, if you're looking at the delta, you can see it's really sputtering around. Any deltas that come in here are big negative deltas, big negative deltas. This is from the time the high is made. And what happens? Eventually the market has this big dramatic sell-off, but you could just see in here, right? We're coming back up towards this high, right? We had some selling here, some aggressive buying, right? Positive deltas. We're going back up to the high. Maybe this is it. Maybe we're going to, should I be FOMOing in or not? But what you're seeing is these small deltas up in here, right? Again, which is a sign of absorption, meaning, because people are trading, but they're evenly matched, right? There's buyers, there's sellers, and they can't really push the market anymore. They can't get it any higher because why? People are coming in with supply. And they're able to distribute that supply up here without really moving the market. Now, the best place to sell, if you have a lot of supply, is as the market's been rallying, right? You don't want to be dumping your supply when the market's dropping, because if you do, this is what happens. You get those big bars like this. Obviously, it shows up in the delta with all the selling. But if the market is rallying and you got supply, distribute it, right? That's what we do on the institutional desks, right? I've worked at JP Morgan. I've worked at Cargill. I've worked at Commerce Bank. In a rising market, that's the easiest place to get rid of supply, right? Because you have plenty of buyers. When the market starts dropping, you're going to add to that drop. You're going to add fuel to that fire, and then you're going to get those big bars down. Right? And these big bars down, everyone that's sitting, in front of a screen sees that. Oh my gosh, there's big selling. So if you got a lot to distribute, you're going to distribute it up here near the highs where everyone is looking to buy, and you're going to often end up with smaller deltas contracting. Okay, so that's how you can use delta. I mean, there's many different ways. There's actually delta footprints, which, if you want to look at delta at price, you can. There's diagonal delta footprints as well. The next video or two, I'll talk about delta footprints, because, any edge that you can find in the market that makes sense to you, that can improve your trading, is going to make you a better trader. And ultimately, it's going to make you a more successful trader. So don't dismiss something just because somebody posts something on social media that I don't know anybody that's using delta successfully. Well, okay, maybe they just don't know anybody that uses it. Fine. Okay. I mean, I don't know anybody that uses, well, actually I do know people that use moon phases, but there's so many different ways to analyze the market. Just because you don't know somebody that's doing it doesn't mean it can't be done. So anyway, guys, I hope you like this video. Be sure to like and subscribe to the channel, and look out for my next video. Again, I'll probably follow it up on delta footprints. So enjoy. Bye-bye.